All right. So what are we looking at here? S&P is pulling back. We had a little correction, but we do have the FOMC minutes. Here's the focus. Okay, stay focused. Here's the focus today for the FOMC. Let me go ahead and switch. Actually, I'll switch TikTok screen right after we get through this. I want you to think about this, right? So here's what we're looking for. We got to react to this. How many members are talking about cuts? The Fed is now concerned with how many. I mean, the market is now concerned with about the timing of cuts. It is about the timing of cuts, right? So if there's a dislocation between what the market expects and the Fed's actual communication through the minutes, the market might correct to the downside. We'll see what happens. It's already pulled back a lot. It might just be sideways all day. But here's what you're looking for. How many members, right, are talking about potential rate cuts? Is there less than expected or more than expected? Several members discuss. Is it going to, whenever it comes down to the language, are we going to see several members are discussing the potential for over tightening or cuts, or are we going to see no members? This would be bad. If we get no members are discussing potential cuts, well, that's definitely going to push the market off. Why? Because the market's expecting 3 cuts sooner than expected, maybe in March. If that's not the case, sell off, we go lower, right? PMIs came in pretty good. We're going to go over that data. We have about 5 minutes, so we're going to hit the economic data after we get this in the head, right? Put this in your mind. Some members, this might be just pretty neutral. If we get some members are discussing the potential for rate cuts. So that's what we're looking at. Now, to the economic data, let me switch our charts here. All right, there we go. Right. So when it comes to the economic data, let's pull that up. We had the ISM this morning. That is economic momentum. It is still in contraction territory, but there's some positives there. The labor market signals there are some positives. So here it is right here. Right. ISM business cycle pre-expansion. If you guys want to see it on YouTube, go ahead and jump on YouTube. Business cycle pre-expansion. The reason I say that is because this is the business cycle. This is the turn up of the economy underneath the hood. We've been talking about it. This is the reason we haven't fallen into a deep recession, because manufacturing has been bottoming for about, you could call it 12 months, right? 10 months. It's been bottoming out. You can see there was a sharp pullback earlier in the last couple readings, and then now it looks like we're starting to head higher, but it's still in contraction, right? Below 50 is still contracting. We want to get above 50. When does that come? Maybe April, maybe May, sometime around there. There's a lot of construction and fiscal stimulus still coming into the economy. If we go a little deeper, right, what are we actually seeing in the details? Slow demand. Okay, slow demand. Okay, yeah, that makes sense. Slow demand, the economy slowing down. That's why the Fed is cutting rates. Increased production. This is good. This is positive. This is growth without inflation. And then on the third side, increased labor supply. This is why the market will eventually get bought up. It'll keep going higher because there's an increase in labor supply. How is that? If we're headed into recession, you would see a decrease in labor supply. Employment's going up. Okay, at least in the manufacturing sector, there is growth. And then the best piece, prices, deflationary, right? All the way to the right. Prices are falling. We're getting deflation in the manufacturing sector, and that is key. So ISM, okay, it's starting to rise. This is forward-looking growth. We see production picking up, deflation. We're getting slower demand, but that'll pick up later in, going into the summer. Now, Atlanta GDP, we just got that right now. Okay, just earlier today, Atlanta GDP tells us they came out. That's forward-looking growth, and we got about 4 minutes. We'll jump over to CNBC to hear what Steve Leisman has to say. We went from 2%. So now Atlanta Fed is now predicting 2.5%. So growth expectations are now picking up. Now we're getting growth expectations picking up. That is huge, right? That's huge. So keep that in mind. That's going to be on my Twitter if you want to just go back on the charts or review the video. And here's what we got. We're going to look at the technicals here. What do you want to see? Okay, now we go to the technicals. Let's jump over to the technicals. What do we want to see here? Well, in the intraday, actually, let's go to this chart. This will be a little better. You got Tesla breaking down, see if we can hold below this level. I'm very interested to see what we get there going forward. Well, the S&P is, below pre-market highs. Really, here's your resistance, which was yesterday's support, right? Yesterday's support is, and that was a big, upside move at the end of the day, is now resistance, right? Pre-market support, got below it, got rejected. If we do not finish above 470 for S&P, or at least the SPY, right? Not SPX, SPY. If we don't finish above this by the end of the day, after the FOMC minutes, the market is guessing that the Fed will not save the market, or they're at least changing their language. I don't know. We'll see what happens there. We don't know exactly how they're going to, actually write that into the minutes. And we have the minutes coming up in about 2 minutes. I just want to get enough in. We're also going to watch the dollar. Does the dollar spike? Let's go back to the daily chart. Does the dollar spike on this move? We came up just like we said yesterday. We came up to that resistance 102.60. We got a little bit more room. If it goes to the next level, I think S&P pulls back even further. And we'll come back to this, right? What about rates? Well, 10-year rates. Let's go to 10-year rates. 10-year rates, they're kind of stuck there. We'll see. I think these might come down. So we don't know. Very tricky. Like I said, everything's pretty mixed up. So we'll go over the technicals afterwards. I'm going to go ahead and switch over to CNBC. I think they're almost ready. We'll have the screen up here, and then we'll talk about what we see. What do you see long-term S&P 500? 5,000. Ed Yardini has S&P going to 5,000. I think that is about true. We're seeing a productivity boom, and we're seeing a productivity boom going forward. Growth is picking up. Fiscal year, election year. There's going to be more stimulus. What up, Hassan? How's it going? So I think we're going to be good. All right. Now let's jump over to, and let me know. Let's let's make sure the audio is working here. I want to make sure we get, there we go. Okay. Let's get the audio on here. I'll bring this over because the minute should be picking up right now. FOMC minutes. And I'll reiterate what we're looking for if you just joined in. I'll reiterate what we're looking for. We are looking for any comments over there on Instagram? No. We're looking for, how does the Fed communicate this? Several cuts. Let me know if the audio works. Are we getting that audio?
Welcome, everybody, to Power Lunch alongside Kelly Evans. I'm Tyler Matheson. Glad you could join us.
Okay, I'm going to turn it back down. Let me know if you guys got the audio, though. It's good. Okay, perfect. All right, I'm going to turn it on as soon as we get those minutes. I'll pause it so we get a. So here's what we're looking for. How many members are talking about cuts? Has that increased? Are there more members? Or are there less members? Right in line. Uh-oh, this is it.
We've backed off, but let's get to Steve Leisman for the Fed minute, shall we?
Yes, indeed.
Kelly, thanks. And I'll cut right to the chase on these December minutes and tell you that to the extent there was a discussion about cutting rates this year, it was not a very robust, in-depth, or resolute or confident discussion. Fed officials saying that they did see the current policy rate at or near the peak in this rate hike cycle. The projections showed that most agreed a lower target range would be appropriate this year, as in 2024. But there was a high level of uncertainty around those rate projections. So uncertain, in fact, it was possible the economy could require further rate increases, the minute said, or keeping the rate unchanged longer than expected. They did agree that it was appropriate to keep policy restrictive, quote, for some time. Now, a number of participants, this is a place where they did kind of hint at rate cuts, highlighted that there were downside risks from keeping the policy rate too restrictive for too long. And some said the Fed should begin thinking about when it might communicate the possibility of winding down balance sheet runoff, but that seemed to be far into the future and very, very obscure in terms of a comment. Now, more importantly, on the issue of inflation, the risk to inflation were seen moving towards greater balance, and they said it was clear progress had been made on inflation, but they underscored they needed more evidence to be confident that inflation was moving back towards the 2% target. There was some optimism about it surrounding, for example, labor supply and demand coming back into balance and housing inflation coming down. Labor market remained tight, but coming into better balance. And participants saw momentum of the economy as stronger, perhaps, than currently assessed. Now, there was a bit of an upside and a downside to the inflation discussion. I'll go through it and to give you one important point here. Many remarked that the easing of financial conditions could make it more difficult for the Fed to reach its goal, noting that that yields had declined pretty substantially in the lead up to that December meeting. On the downside part, there were lagged effects of policies and potential weakening of household balance sheet. Just one more thing, the staff forecast, which is pretty important in terms of the Fed making their decisions, also saw continued upside risk to inflation. Kelly, Tyler?
All right, Steve, thank you very much. Stay with us as we're going to return to you in just a moment. But meantime, our next guest says rate cuts seem like a matter of when, not if, but it might take.
Okay, we got that done. So that was pretty hawkish. They didn't mention, there wasn't a whole lot of participants that mentioned that we would be cutting, that they want to see and talk about cuts. I think he said Some are thinking about cuts. They still see upside for inflation and possible tightening. Wow, they turned hawkish from the last meeting. And right now, S&P, we'll go ahead and switch to the market, and we will digest this data. We'll go ahead and digest this. Let's switch over to see how the S&P is actually responding. Here we go. I believe this is it. Here we go. S&P. All right. So that's the resistance. We just got rejected. We just got rejected at that pre-market high. And that tells us that we could be moving lower. We'll see if we can hold VWAP. VWAP's pretty huge. This is where institutions are at. We got above it. We'll see if we leak below it. But basically, they're a little more hawkish. User one says, so as it continues to be true, higher for longer. That's what they say. They're communicating this. Now, remember, this is the other part of the Fed. It's not just what they say. It's what are they trying to communicate here? Maybe the market got a little ahead of its skis. Maybe rates fell too fast. And now they're like, okay, let's use our language to tighten financial conditions slightly, or at least not give a signal that we're going to further ease. Because if that's the case, and they say, hey, we're going to start cutting 3 times going into, March, April, May, whatever it is, or March, whatever the 3 next meetings are after March, the market might run up too quick. Rates could fall too quick. So I think the positive here is just watch oil when it comes to inflation. They talked about upside risks in the FOMC minutes about inflation, but oil's not really going anywhere. When we go back to the daily chart, oil's still stuck. Maybe they're considering some of the geopolitical risks, right? If those continue to rise at some point, you could see oil make a big upside move. I'd say the resistance right now for oil is the major resistance in the short term is around 80. That's where we were sort of. If we go all the way back here, we could make a move back to 80, right? 80, 83.50. We talked about that a lot. All of 2023. Where is oil? Is oil going to stay below or above that level? We got above it for a while. Markets freaked out. Inflation sort of reaccelerated. And then once we dropped that level, inflation came down significantly. So that was more hawkish for sure. Now my guess is that S&P is going to start coming back down. Now I want to see on the daily chart, this RSI, we are dropping right now. I want to see the RSI. Those are some pretty strong, there's some big gap downs there. So I think we're headed for that 200 daily moving average. I think we're headed. That was the prior support also, or resistance somewhere around here. We could go below that, but it looks like we're headed for about 460, possibly for who's this? No, I don't think so. Or 450. Yeah, we could be headed for 450 also on the downside. Right. So that was the message. The last meeting, it was dovish. Haha, Jay Powell. Last meeting, Jay Powell was very dovish in my view. And when I say dovish, it's dovish versus the previous meetings, not just what he said, but versus the previous meetings. The market is always tracking, looking forward, and then tracking what just happened. Hey, GDP got revised higher. So let's take that in consideration. GDP's up. ISM is still negative, but it went up from the prior month. Okay. New orders are down. So growth is not reaccelerating too quick in the manufacturing sector. We'll see services, I believe, at the end of this week, but inflation is not going anywhere. We saw deflation in the ISM, Supply Chain Manager Index, right? Those are basically purchasing managers making a survey about the future. That's what the ISM is. It is purchasing managers, and we saw that those purchasing managers are pretty flat, but I think we're recovering going forward. So Gervain, or would you say, yeah, what up, Gervain? Disconnect between what the market anticipated versus what the Fed policymakers are now saying. Communication is now higher for longer. Yep. Now they switched the communication higher for longer. We all know that can change. We have, more Fed members that can, continuously talk throughout the week. So this is probably a due pull. Are they speaking to the stock market? Not necessarily. What I think is more importantly is they are guiding rates. So how did rates just react? Not much. Not much. Rates didn't react much. Let's look at the short term. We'll go through all the rates because that's who they're speaking to, is the bond market. They're speaking to the bond market. The bond market eased on them and pretty fast, going back to that last meeting. And October, when the market pretty much bottomed, October is the bear market killer. Put that in your pocket. We eased pretty significantly. And we're not, it's not retracing too high, 2-year, 5-year, 10-year. Bond market's not moving. It's not reacting that strong. What about the dollar? Dollar might be going up. Dollar could be moving up. So, and I think this is more of a positioning thing. The dollar's been, selling off pretty sharply. You see the RSI is picking up buying pressure on the dollar or selling pressure in asset prices, right? If you're selling assets, well, you're going to settle in dollars. So dollar's starting to move up there. I don't think it's a material geopolitical risk upside move. I don't think it's a risk off move, more so a positioning move, right? So oil's not up, whatever. Bitcoin, I think there were some rumors that the ETF would not pass through. Who knows? Bitcoin's going to be pretty crazy there. But either way, I think the question is, where do we bounce, right? Where is the next support? Let's move to this chart. Let's go to the 200. This is kind of where we've been bouncing at. Now, also, I would say watch the RSI as usual. Watch this. This is the halfway mark. Once we get below, the selling pressure becomes a little, extended. It becomes a little stretched. Right now, we went stretched to the upside. Now we're going to be stretching to the downside, right? Especially after those minutes. Can the S&P bounce tomorrow? Sure, it can bounce for the rest of the week, but I think we have to look forward also to what we're going to get. Now, this morning we got job openings lower, so the labor, that's not labor supply, it's the amount of jobs that are being created is falling. That's good for the Fed, right? That's less inflation, and it's still at a pretty elevated level, so no worries for the economy there. Let's see. Tomorrow we have now the market's going to look to employment. What does employment look like? Initial jobless claims tomorrow. I don't think that changes much. ADP private payrolls. We get that tomorrow. Friday, we get inflation from Europe. That's falling pretty quickly. We're at 2.4%. And then non-farm payrolls. So Thursday's our next big day. That is already tomorrow. Thursday is going to be non-farm payrolls. I think they have, wait, no, that's Friday. I'm sorry. I messed that up. Friday is non-farm payroll. So Thursday is going to be, whatever, but Friday is the big day. What would cause the market to drop even further? Likely after that, actually after that, those hawkish comments, if the labor market does weaken to some degree, well, that's going to be a positive. You see how the Fed kind of uses communication to manipulate the market, right? Uses their communication, because what they're doing is, if they get too dovish and say we're going to cut, and then all of a sudden the labor market comes out strong, well, that doesn't make any sense. So I think they're just going to wait till they see more data before they make a definitive decision about cuts. But that is definitely a back step from earlier. That's not very hawkish. That doesn't align with the market. So I think we do move lower, my opinion, because that just doesn't align with the market. The market wants to see more dovishness from the Fed, and we're not getting that. But if employment comes out weaker on Friday, we could get that. All right. What else do we got here, Jervain? I thought the last FOMC was like a victory lap, rates near the end, but language changed again. Yeah, it was a victory lap. I mean, I wouldn't take what they just said in the minutes as too much fact. I mean, they're just trying to tell the market. They're controlling the market with the minutes, right? The minutes are their way of recorrecting possibly the financial conditions. Financial conditions are the dollar, right? And the dollar's been falling sharply ever since the last meeting. So the dollar has eased financial conditions, maybe too fast for the Fed. Oil's been easing. The Fed doesn't really care about oil right now because that's good. And rates, so you go to 10-year treasuries, those eased pretty quickly. So the market has been easing for the Fed, and I think the dovish tone is just a way to say, hey, don't ease too much. Not yet, right? Don't ease too much. Not yet. We have a rebound. This fits right in with the correction. This fits right in with tax selling to collect profits on, nobody wants to pay taxes on this big giant run up in the S&P. Nobody wants to pay taxes coming up. So they're going to sell in January. I think that's what we're seeing here is tax selling. So they don't have to pay for another 14 months, which will be what, next February, March, April. So I think a lot of that is the selling that we are seeing here. Dollar going up. Bonds, nice bid in bonds. So bonds are actually moving counter to rates a little bit. Let's see what the bond market is doing after that. Bond market, if TLT is going up in the intraday, then that is a signal that the bond market is not taking this very hawkishly. They're taking it. They don't believe the Fed that, there's possibly more rates. I really doubt it. There's no more rate hikes. We're not going to see that. If we can you pull up CME website? Oh, you want to see the Jervine, do you want to see the possibility of what the market is projecting. I think that's what you're aiming at, right? Let's go ahead and pull that up. Let's see what we got here. Fed Watch CME tool. Yep, I got you right with it. Okay, let's walk through this. TLT coming down. Let's go back intraday to S&P. Yeah, looks like it's we'll see what happens. Pretty volatile there. What are the Qs doing? Qs made a new low. Qs made a new low. So I think the market's trying to digest. The words definitely were hawkish because algorithms are going to start hitting. And I think that's what we saw. All right, let's go jump to that CME chart and see. Here, I'll bring this over for TikTok. All right. So the CME chart are basically futures are looking at, whoa, why does it look like that? Futures are looking at what the Fed might do or what the market believes about the Fed. So January 31st, this is the next meeting probability that we pause. We're here at 5.5, 5.25 to 5.5. That's where we're at. So there's a 91% chance that we pause. There's no rate hike. No, the Fed would have communicated that already. Things are slowing. March. Here's where the cuts were, right? Here's the cut, 64.8% that we see cuts. Let me move this out of the way real quick so I can read the rest of it. So this is a 64% chance we cut in March. All right. If we go back one day, we were one day prior, we were at 69. So that dropped. So basically, after the FOMC meeting, the market is not as dovish or, not anticipating as many cuts or as strongly a cut as it was prior. That was kind of confusing. Let me say it again. The market is not as dovish, barely, as it was. So it's reacting, right? Anything else you want to see there, Jervine? Let's go to May. What do we got in May? Okay, that's huge. So May, we have another cut. So this would be 2 cuts by May. 2 cuts by May. The change is another drop, so less dovish. So I think we do sell off. Where are we at? Okay. And then a hold in May. Or no, that's another cut. Wow, that is another cut. So the market has been anticipating March, May, June cuts. March, May, June cuts. Year end. The market is seeing, wow, that is a lot of cuts. That's why the market has been going up so much. So it's time to retrace. It is time to retrace. So we're still looking at cuts in March, May, June. But if the Fed does communicate that, if they do say, oh, yeah, we're looking at cuts, I think the market just, financial conditions ease way too fast. They front run the Fed. The Fed is in damage control. There's not too much damage, but they want to make sure that inflation doesn't rise again. Housing is still accelerating to some degree. All right, let me check comments here. If you got any comments, questions, let me know. I don't see anything yet. Lance Harvey, what up? What up? I'm looking at 3 different streams here, so I'm just comments are not all together. All right. What else are we looking at? All right, let's get back to the charts. And then leave your comments there. Q selling off a bit. What do we got here on TikTok? Oil might cause what up, Ace? Oil might cause a nice pullback. Oil itself, oil pulling up. I don't know. I don't think oil makes a big difference anytime soon. If we run up to 80, sure, but I think you have to get above 80. I think you got to get above 80 to really cause any type of panic. Not real panic, but like, okay, inflation is going to stay sticky. This is really your barometer for inflation becoming sticky or not. Housing is still falling because of rents, not because of housing prices, single family home, but rents, multifamily being built at a record level. And those prices are falling everywhere you look. Go ahead and look on Zillow. And it might depend where you're at. Miami's not dropping. San Francisco, I think, just dropped. New York's kind of sticky. Arizona's falling. So it depends where you're at. I don't think oil makes a big deal. I think the key is watch the dollar. If we break out of this downtrend, we move up, we have further downside for S&P. Maybe it creeps up. The market is still digesting. I think that. Now, it came off hawkish. I don't think it's that bad. Saint Traders, what up? Our cut pause is possible. Our cut pause is possible. Cut pauses since we had rate hike pause. Since we had a rate hike pause, our cut's possible. So Saint Trader basically, the market before this meeting, the FOMC meeting, the market is communicating that it wants to see, or it's expecting 3 cuts, right? We're expecting 3 cuts, March, May, June, I believe. Hopefully I got that right. March, May, June. But the FOMC came out and they changed their words basically to reiterate, hey, we're not really talking about cuts like that, right? They said we're not thinking about, only some people are thinking about cuts. So if they said many participants are talking about cuts, that would have been extremely dovish. So it's all about the number. You have 12 members. How many members are talking about cuts? Not very many, right? Not very many. So we're not there yet, but I think conditions already eased far enough that the Fed doesn't need to talk about cuts yet. It's all about expectations. They're handling expectations. They are controlling expectations for the market, and that's all we're seeing there. So we might still see cuts though in March, right? It all depends on inflation, how quick it falls. And we just got the ISM prices paid, which are prices for the manufacturing sector are falling. We see deflation there. So hey, this was the read for December. So we still have January, February. We still got 3 months. We could fall further, a lot further in inflation. Watch oil. If that's the case, the Fed can come out and cut just because inflation is down, not because there's an economic recession, but because inflation is coming down. All right. Let's see what else we got. SPY 460 or SPY 468.50 or lower. I mean, it might finish the day lower. It's already sold off a lot. I think there's a bounce due here. Okay, I think we already have a bounce due, but if there's gonna be, we need to get past 470.50. 470.50 is the clear. Is this guy trying to file closed? Are you trying to join the live file closed? If you're in here, then go ahead and let me know. If you're not, I don't know who that is. Who else we got here? More news on oil in a few hours. Okay, we got some oil news. All right, we'll take a look at that. We'll look at the business cycle. Remember, the business cycle is all the economic news, right? Whether it's growth, inflation, whatever that is. All right, Jarveen, back to Jarveen. Okay, oh, I'm sorry, I missed that one. Market might be overly excited about the cuts. Then what's going to happen in reality? Yeah, the market's a little over, it always moves too much. It always gets exaggerated to one direction or the other. But I think the Fed is just making sure conditions don't ease too fast, right? We don't want to ease too quick, although the market doesn't really care. Productivity growth is picking up. That's growth without inflation. GDP just got revised back up to 2.5%. So it looks like we're going to finish 2023 because we don't have all the data yet, right? It's always lagging. GDP is a backwards looking data point. It looks like GDP is going to come in stronger than expected when we started the month. If that's the case, well, people are going to say, well, are we getting inflation with that growth? Is inflation picking up with the high? Are we getting higher expected inflation as growth is higher than expected? If the answer is yes, the market moves sideways. But if the answer is no, that's Goldilocks. And Goldilocks is accelerating growth and decelerating inflation. That's a perfect scenario for the market. Okay. And then we got to look at the dollar and rates. All right, back over here. Okay, so he said we got more. Shan, what up, Shan? I appreciate the pushback also. I love the pushback on anything I say. Always keep me in check. If you believe so, we will talk it out. All right. Sox is picking up on momentum today. Volume been high since morning. Right now we're at 81 million. We're talking about that is I'm guessing that's a semiconductor ETF. How do you see the US 30? I'm pretty sure the US 30 is the Dow. So I can just go to the Dow here. It's all the same. US 30 Dow. Look, we'll go over the Dow fundamentals. I'm sorry. We'll go over the Dow. Or do you want to just do US 30? Here, I'll go to US 30 since you already look at, since you are probably a Forex trader. US 30. Okay, so US 30. Look, we're due for a pullback, right? We're due for a pullback here. If we're not going to look at gaps, but clearly, if you look at the RSI, we can use MACD and RSI. I'm going to start using MACD. The MACD, okay, hopefully we can zoom in a little further. I know it's really small on Instagram. Maybe if you turn your screen sideways, you might be able to see it a little better. But you can see the MACD is rolling over, right? It's now crossing below support. So, let me take this off. We're now crossing below support. So we're due for a pullback. That momentum is slowing. This just shows you momentum slowing. RSI confirms it, right? You're getting a lower high, a lower high. So this is bearish divergence. We got a big upside pressure here, but it's a lower high on the RSI, right? RSI is coming back down. We may just come halfway down to 50, right? Because I think we're in a bull trend here. We're still moving higher, but this all points to a pullback. And the real question for the US 30 or for the Dow industrial average is, where do we pull back? Here's your prior high, right? I think we come back down to this zone though, somewhere around the 200. So maybe like 3,600 on the Dow or the US 30, somewhere around 3,600 is your low, maybe even 35. Okay. Look at that 200 daily moving average. I think that's what I see for the US 30. I hope that helps. All-time high. We might get back below. We'll see. We'll see how it plays out. And the real question is there any more economic data? We're still in macro zone here. Okay. So keep this in mind. If the dollar keeps moving higher, US 30 is going lower. Okay. If the dollar peaks out here, because it's already it's at its resistance zone right now. The dollar is at resistance. Okay. It is at resistance. It could push a little higher. If it's done here, possibly the stock market, Dow, US 30, NASDAQ, maybe it just consolidates. But if the dollar keeps pushing, right, and it could come to this 200, then we're gonna leak a little further. I happen to think we have some downside because we're gonna be looking for more numbers, and I think the market is now more fearful of slowing growth to the point of recession, and it's looking for the Fed to use its language to say, "Oh no, we're gonna cut." We didn't get that today. We didn't get that. We're not even thinking about cuts really yet. We might just hold rates high. We might just hold them for a while. Right now, they're switching back again. And all they're doing is trying to get financial conditions tight. They're actually trying to get the dollar a little higher. They're trying to get 10-year yields back a little higher. Okay. Next resistance for yields is up here. Now, if yields don't move up, I mean, I think we're okay. Worst case scenario, yields spike and the dollar spikes. Then you have you're going to get a bigger move, a bigger correction. Hopefully that makes sense. Correct. We will get a retro retracement is maybe what you're saying. Vero Thorpe, a retracement. I think that's what you're looking at here. Okay. QQQ RSI oversold on 4 hour. Yeah, we're oversold. We're pretty oversold. Fear and greed. That is Asan. What up, Asan? I know I said what's up already. Oh, there it is, Jervine. I'm sorry, I missed out. Middle East tensions, military presence, Red Sea shipment issues causing oil to surge as of recent. Okay. Okay, so Middle East issues. We'll see if that continues. And I think this also plays into why the Fed is a little, I don't know if it's really that close, but it does align with the Fed being a little more hawkish, because if this geopolitical risk continues, then you get oil moving up. But you still have a lot of OPEC and non-OPEC countries pumping supply. A lot of oil experts, right, in the oil markets believe that Saudi Arabia is done losing market share. They're tired of lowering production. The more they lower production, the more Iran, Venezuela, maybe not Venezuela as much, but the other non-OPEC countries, the more they take market share from Saudi, right? US is the biggest producer now of oil. So of course we're going to keep pumping, but they may flood the market. They did it during the pandemic. They flooded the market in order to gain back market share. If we do see that at some point, and they might do it to help out, I would assume, I'm not a geopolitical expert, but I'd assume that the US is going to have some incentives for Saudi to flush the market. Who knows what that is? Military, who knows what it is? And I don't think oil gets much higher. I really don't. I think you need a bigger war for that to happen. I don't see it happening, but we could push up back to 80. If I'm wrong, I'm wrong. Okay. Fear and greed is slowly backing away from extreme greed. Yeah. We're overbought. We're coming back down. I think we have a couple more weeks. Now let's look at the data. Let's see what macro data we have that could change this. Okay, so we'll keep track of that too. We'll keep track of the target. All right, so I'll leave the charts up here for YouTube, and I'm just going to go over what data we see going forward. Of course, Thursday is whatever. I don't think the market's too concerned. Jobless claims are not really moving up considerably. S&P global PMIs, those are purchasing managers. I think we're going to be stuck around neutral for a while, meaning growth is stuck. We've been calling this Q1 into Q2 should be slow. It should be slower, but it doesn't mean, but we are reaccelerating by looking at labor and productivity. Productivity is picking up. AI is helping that out. Automation is helping that out. Immigration has been helping that out. Okay. So Friday, non-farm payrolls, we could get a big move on Friday. What is the market expecting for non-farm payrolls? The market is expecting 170K consensus. If we print below that, that means, and this is really going to get tricky because now the Fed is more hawkish. If we do print below that, I think it's going to cause a fear of growth, right? A growth fear for December, especially December, as jobs roll off. Why would they roll off? Well, simply because seasonal jobs are done, right? You're not getting hired, part-time work for UPS. Most of the deliveries are over. So I think we're gonna see that. Saint Trades, what up? It's feeling like bearish sentiment coming for the year. I'm skeptical about the rate cuts pumping up the markets. Yeah, it's all about communication. The market will pump before the rate cuts actually even happen. It'll pump based off of growth. I think it's all about inflation still. The story remains inflation. I don't think it's a risk anymore. Inflation is not a risk right now. It is growth, falling. We've had ISM, forward-looking growth in the manufacturing sector, contract for 14 months in a row, but we're not getting recession because 70% of the economy is services, and those have been positive for the most part. And we do, okay, that actually brings me into services. When do we get the service PMI? Okay, we get that Friday. ISM services PMI, we get that on Friday. We're at 52. If we drop below 50, we're in contraction. Now, if that goes below 50, I think the market does sell off. The dollar goes higher because services have been the only part of economic momentum that have been actually expanding. Manufacturing has not. So Friday is a big day, and those all come in, of course, early, midday. So Friday is going to be a big day. Today, the Fed is more hawkish. Okay, it's a little more hawkish, slightly, not too much, slightly, just to correct financial conditions. If we move over to next week, January, we don't have much. Wednesday, Tuesday, Monday, Tuesday, nothing. Let's see. Okay, inflation on the 11th. Okay. So next Thursday, which is, a week and a day from today, we have the inflation report. So Friday and Thursday. Friday this week and Thursday are your two big day-to-days. Friday was employment. I don't think not much changes, but we could be seeing that shift in the next report, which would come in February. I think February is where we see real pain. We might get S&P retrace back up to the highs and then sell off again. I don't know. We don't really know, like I said. But for now, I'm watching RSI, fall. Right, the momentum is rolling over, so expect this correction to continue, especially with the Fed being a little more dovish and the dollar on its way up. A little bit of geopolitical risk, and then maybe we get saved January 11th when the core inflation and inflation numbers come in. I think those just continuously fall. So we should be good by then. That's my guess. Crypto, on the other hand, that's going to be a big day because I think the ETF decision from the SEC must be decided January 10th, somewhere around there next week. Who knows? They always, move things around. Could be January 10th. But for now, I'm looking at S&P to come down to 460. First target, 460, somewhere around there. It doesn't mean short though. For sure, don't short. There's a really good scenario that there's a really good chance. Let's go to this one so we can see the pre-market. Really good chance. Oh, there we go. Now the market's moving back up. So digested the news. We got back above 470. I wouldn't get too excited yet because you had a big gap down, right? You squeezed all the longs out. Shorts probably covered down here. It's moving higher. Yeah, we're starting to digest it. GDP got revised up. So again, we're in this weird scenario. I think it's all about positioning at this point. We could move back up, fill that gap. I don't think we do this today. We still got 2 hours. Hour and a half, 90 minutes. If we do fill this gap, look for the reversal. Prior day resistance. Look for that reversal. Gap fill, sell off. I might be looking for this tomorrow. Really just depends. I might be looking for this tomorrow. We'll see how that plays out. Okay, good. All right, and if you're just joining, maybe you just jumped in. If you're just joining, we're looking for what the Fed would say, okay? How they would communicate on their minutes. Their minutes are just looking at the last meeting and correcting things up, changing the language a little bit. And they actually were more hawkish. They said, hey, we're not really thinking about cuts at this moment. As a matter of fact, we might even be tightening or keeping rates higher than longer. And I wouldn't trust what the Fed says. You can't just trust what they say. You got to trust what they're trying to do. And what they're trying to do is keep financial conditions tight enough that inflation doesn't come back. And they've done a good job. Inflation is falling significantly, right? So we finished with that. But I think, okay, now we're going to jump forward a little bit. I think if we look at the economic momentum, right, it is starting to pick up again. Business cycle is starting to pick up. It's been bottoming out for a while. And when you get the business cycle explode higher above 50, that's when growth really starts to come in. Okay. But we're not seeing that. We still probably got 2 or 3 months of slow growth. Okay. January, February, March, maybe we pick up in March. What is March? Spring break. People are going to spend. They're going to move around a little bit. I got some birthdays. No, I'm just kidding. But yeah, March and then April. I think April, May is where the economy starts to reaccelerate. Okay. Also, it's an election year. I say this all the time. It's an election year. Expect more stimulus. Expect more stimulus. You also have AI, still a huge theme. Why? Because Apple has hundreds of billions of dollars in cash. They're operating at free debt. They're operating off free debt. I mean, they're collecting 5% interest on Fed funds, and they're locked in at 3%. So they have excess capital to do what? To buy more chips. To buy more chips. So SMH, right? That's a semiconductor. I know somebody was looking at stocks, but SMH is the other semiconductor ETF. I think it made all-time highs. Let's go back here. SMH, where are we at? Yeah, expect more semiconductors. Let me take this off. Expect more semiconductor strength. But we need a pullback. We definitely need a pullback. I'd be looking at that 200. We'll look at that 200 daily. If it doesn't hold, we could flip to the 200 weekly. I don't think we come to the 200 weekly though. You'd have to get some bad news to come down that far. I'm going to say if you're looking at the weekly chart, check out the previous high, which is around the 50-week moving average, or check out the day. If you like the daily chart, then look at the 200. The 200, and we're right about there for SMH. I think financials are set to rebound a little bit. What else do we have? We'll see where the Qs finish off. We could come all the way back down. If we go at that lower bound, 382 on the Qs. 382 on the Qs. Okay. Let me flip over. If you ain't got, oh, here we go. Apple needs a new product. I doubt their VR glasses are gonna bust sales. I think people just spent a lot of money. They're unsure how to use it. Saint traders. Oh yeah, that's a good point though. Let's bring up Apple, because Apple's moving the market. Apple is moving the market. Oh my goodness. Wow, that's real weakness there. I think the RSI is overdone. Momentum for Apple's coming down. If we look at the RSI, it's almost overdone. I would watch this too. Last time the market sold off, Apple, it became oversold, really oversold. It bounced on the RSI. Remember, this is larger than the small caps. Apple's bigger than the small caps. So you got to watch Apple as a bellwether, not so much to the economy, but a bellwether or an indicator of the overall market. Right? Indicator of the overall market. And I would say NVIDIA to some degree also, because it's growing so fast. Microsoft is doing pretty well, but Apple's getting crushed because China's slowing. And iPhone sales, there might be a ban. There's just some, there's some treading waters, or some rough waters right now. That's about it. It always resolves itself over time. Remember the credit impulse cycle for China, meaning they're printing more loans than GDP at this point. That's a leading indicator for growth in China. When China rebounds, the global economy is going to pick up pretty quick. I still think it's going to be May, April. Okay. It doesn't mean the stock market is down until then. I don't think that's the case, because right now we're seeing stock pickers market, right? Look at AMD exploding. AMD is moving up regardless. So it's going to be a stock pickers market at this point. Overall indexes, they could always move up, but the economy is going to probably reaccelerate going into May. But the fact that Apple is dropping this fast, that's a lot of profit taking also. I mean, you're talking 7%. That's hundreds of billions of dollars out of Apple. Where is it going? Well, just flip to the dollar, right? If you're selling Apple stock, you're probably settling in dollars. So that's why the dollar. So just watch the dollar also as a signal. I always say that over and over. I'm just going to keep repeating myself so it sticks in your head, the macro forces or, the macro indicators you want to look at to understand what might be happening internally for the market. But back to Apple. Actually, no, let's go through tech. Let's see what tech's looking like. Who's weak? Meta. Meta's pretty strong. I think Microsoft is a lot stronger than got a little falling flag there. Microsoft's not bad. And you can see on the MACD, Microsoft's almost back to 0 or the lower bound. It is holding on the RSI here. Not too bad. Okay, let me get to those comments. I know I missed some of the comments here. Try to be quicker. All right, what do you got here? Tigger Media, what up? They might be waiting for closer to the elections to turn on the QE. I mean, they've been QE. Yeah. I mean, it depends what QE you're speaking of. If you're speaking of the Fed's balance sheet, you might be right. I think we got to think about QE. QE probably comes into play. When I say QE, I'm talking about the Fed's balance sheet. Let's go ahead and switch to the Fed's balance sheet. I know this is mixed up. Let's go Fed balance. Actually, let's just do global liquidity. Let's turn all these off because this is the real QE here. Global liquidity. Okay, we'll turn all this off. This is global liquidity in orange, okay? Global liquidity, TLT. This is pretty interesting. You see how the bond market rebounded and global liquidity. What am I talking about? All money growth, deposits, whatever it is, China, Japan, US, everybody. Global liquidity is picking up when the bond market bottomed. Why is that? Because the more bonds that are bought, the more debt that can be printed, pretty much. This gives money to the US Treasury. They're going to keep printing. They're going to do more fiscal policy. I was looking at some of the initiatives earlier, and that's why I don't think we go into recession. There's just too much fiscal coming into the system. Apple got downgraded yesterday by Barclays. Oh yeah, I remember that. Yeah, that keeps the market, not too strong. I think we're gonna have stock pickers market. Can I look at DHI? Yeah, we'll look at that. DHI. So yeah, global liquidity. My whole point was global liquidity is slowing a bit. So once this signals back up, right? Then the market is going to start to recover. But if we do get the Fed's balance sheet ever, because right now it's flat. If we ever get the Fed's balance sheet, you can't see it on here. Let's get rid of some of these. If we do get the Fed's balance sheet come back into play, because you mentioned the Fed's balance sheet. Okay, there it is. Right? Then for sure we're coming back up. Oh, it looks like is this M2? No, this is M2. This is money. Yeah, this is M2. So this is another economic momentum indicator, which is money supply. Money supply bottomed, right? It's starting to pick up. This is why I don't think we see a real recession. Money supply is coming back in the system. Fiscal, U.S. Treasury market is up. That means you can loan more money. And now that rates are coming down, that just increases liquidity, right? So we'll keep our eye on that. I think we have, some time to consolidate here. I'm looking at Tesla. Tesla had a nice dip. I think it has a little bit more weakness before I start to look at it. But you said DIH. Apple needs to grow headset. Let me just make sure I don't miss any of these. Is there any positive China news since Baba is pumping today? Well, I'll tell you what. China's market is extremely oversold. Number one, they were the worst performer in 2023. Typically, as the year changes, DHI, my bad. As the year changes, typically the market will recover. Plus, they're stimulating record levels of stimulus, and that's going to go to capital markets first. But they need to get their housing market up because most of their GDP comes from real estate. And I think that's why I don't see a war. I know a lot of people are like, oh, they're going to invade Taiwan. I don't think so, unless their economy is very strong. Typically, you don't see war ramp up unless commodities are much higher, unless, the economy is very strong in that nation, or else they can go bankrupt. Okay. So this is a home builder, Horton, DR Horton. Yeah, I think DR Horton looks good, bro. It looks pretty good. Why? Because rates are falling. As long as rates remain where they're at or keep falling, then that's going to incentivize home builders to start building. And they're already starting to build. We saw the home builder sentiment index move up last month. We get another reading pretty soon here. We'll see if it keeps moving up. It's a little delayed. It's not as fast as the ISM because it's not forward looking. So we'll just look at home builder survey, but it looks like, yeah, you might want to get a spike here, right? Unless you're just watching it. I think there's some support here, right? Previous high, 50-day moving at 50-week moving average. We're on the weekly. DR Horton, 130, 131, somewhere out there. You definitely want to pull back though. You need a healthy pullback, and it's very oversold, overbought too. Momentum is still picking up, maybe slowing. So I'm thinking 132 if you're looking at DR Horton. Is there any oh yeah, we went over that. Since BABA is pumping, let's see how much BABA is pumping real quick. BABA, I mean, I know you're looking at the daily chart. It's not pumping much. It's not pumping that much. It's still down so much. Why does that MACD look so weird? That's so weird. Yeah, I don't trust Chinese stocks. I don't really trust this. You need a real bull market. Plus, China's population growth is falling. I just don't. You never know with China. You just never know. This is a big pattern. When it does break out and holds, it'll be straight. I'd go to the weekly because this trend is really dragging out. I'd look at the weekly. I wouldn't even be interested. See how it's holding below now the 50-week moving average. It's now holding below that. So I wouldn't even be interested in this until that 50 starts to point back up. Okay, starts to get vertical. The slope. Is this the right one? Yeah, till you see the 50 slope up. And maybe even cross these. Right? But yeah, and break out of this too, and then and then come back down. So I think BABA has a while to go. If you're day trading it, like I was saying, it doesn't matter. You're just, you could short it, whatever. Saint Trades, what do you think about ARK investing? ARK Invest dumping shares and buying up a lot of BITO, ProShares Bitcoin ETF. So what are they dumping shares in? So they're buying a lot of Bitcoin futures, right? BITO is Bitcoin futures, I believe. You want to see Roku? Okay, I see you. ProShares Bitcoin ETF. Is this a futures? Is this futures? Or is this a momentum? Oops. Yo, I would say this. If what you're saying is correct, this might be what if ARK knows, hey, the ETF's not getting oh, they dumped Coinbase. Okay. Maybe there's always it's not really clear whenever somebody dumps shares. You don't know why. It's not necessarily a bear signal. They could be overweight. I'm pretty sure Coin made a big move to the upside. They could just be rebalancing here, right? It broke out. I mean, if they were buying Coin down here at 40, they're up. Wow, they're up what 200%. So they could just be rebalancing and then getting dang, that's a big move. They could just be rebalancing, bro. And then rotating because it's a better spread for them to trade. There's less supply here. That could be it. This looks really good though. ProShares Bitcoin Strategy ETF. I'm pretty sure this is a futures contract. Correct me if I'm wrong, because there's no real ETF yet. So this could be futures. You said Roku. Roku's a little tricky. Roku's very tricky. I don't really like Roku's price action. It's so sloppy. But I wouldn't be interested until Roku. Let me move this over a little bit so I can see. Roku had a lot of volume here. Okay, so maybe you want to see price come back down to that 200 moving at somewhere around 75, right? Maybe 75. It could not get above this level. Maybe 75. If you're looking for a big swing trade or position trade where you're holding it for months and months and months. But for the most part, I'd say Roku needs some room. Everything's going to pull back a little bit. The question is, when does the dollar peak out? Rates, I think they keep slowing. When does the dollar peak out? Where does S&P, Qs, IWM peak out? You know, a lot of you or a lot of people actually should be taking a look at IWM. Look at this. IWM has not doesn't have a lot of inflows, and you're seeing this golden cross take place where the 50-day moving average crosses above, or the smaller time frame moving average starts to cross. This is a momentum indicator. So I want to see IWM pull back into that 50-day moving average, somewhere around that. You had your biggest volume here. So this is weekly, so it doesn't mean, too much, but my guess is that you see some nice support around 185, right? 50 days crossing, you get a golden cross here, a double golden cross. You might even get a triple. No, you ain't going to get a triple golden cross. You're going to get a double golden cross. Price pulls back in about 187 to 185. That's where you have the largest volume bar for the week. And you could bounce there. But, overall, like I said, I think the market keeps pulling back. Maybe not viciously, but I think it keeps pulling back to some extent. Nvidia still this is going to be so bullish when it breaks out. It just cannot drop. It just cannot drop. Let's take that volume back off. It's a little sloppy. Yeah, Nvidia has too much demand. It's not going anywhere. AMD might be nice. AMD is a complete monster. It's now pulling back into that range. 130, right? So this will be a great scenario for AMD on the weekly if it can pull back to around 125-ish on that 50 weekly moving average. What is your position on buying this dip? Well, I'm not buying S&P. If there's anything I'm buying, it's Tesla. It's Tesla because we're right around the corner. And I know I say this all the time, but we're getting closer. This is the most shorted stock in the market. Plus, I'm just more familiar with trading Tesla. And we're getting close to where somebody's going to announce the FSD licensing. We got that in Q2, I believe. And it's about time before they announce that. Some people say it could be Ford. Could be Ford. And I think this is the biggest trend, right? When Tesla breaks out of a 2-year consolidation, a lot of shorts get squeezed. The last time we saw that with the release of Cybertruck, and now rates are coming down. Remember, Tesla's interest rate sensitive. So when if the Fed cuts rates in March, Tesla's going berserk. It's going to go berserk. Maybe even beforehand. You're going to get earnings bottoming, margins bottoming for Tesla. Okay, right now there's a lot of margin concerns from cutting prices, right? They cut the S from like 100,000 to 79,000. So that hurt their margins. That hurt the bottom line. But now they're done hiking rates. I'm sorry, they're done. The Fed's done hiking rates. So they're done cutting prices. And they actually increased the price on Model Y a little bit. Okay. Double bottom around 230. Okay, I see that. 230. Yeah, you got the 200 also there at 230 on the weekly. I think Tesla comes in somewhere around here. 230 is a good spot. 230 is a good spot for Tesla. If we go to the daily, it's already at that 200 daily moving average, but it could fall a little further. Tesla's makes big moves, especially if it drops this upside trend. It kind of broke. If you draw it another way, it kind of broke already. And I'll show you what I'm looking at. It's been climbing here. I don't really like this. The momentum's falling on the RSI. That's why I'm expecting more downside. And the MACD is, you can see the MACD is now starting to leak under, right? The MACD, and I'm going to do more on MACD. I don't do MACD too much, but I want to get a couple more signals, make the content this way. And so you can at least learn something. Don't ever rely on indicators. Price action is king. But, you can use indicators. They're all lagging though. Okay. So yeah, I think Tesla has a little more downside. We could come to 230, somebody said. Pretty good support here. Let's look at the volume. You had the largest volume, and this doesn't mean this is a fact or anything, but it dropped that 240. Next, yeah, probably about 230. And that really depends on the cues. That really depends on the SPY. I always try to correlate, whatever I'm trading with the overall market. So I have a better risk reward. If the overall market's moving up, it doesn't mean my stock will, but it does give it some more juice, right? It does give it a little more juice if that's the case. All right, let me jump over to TikTok. What's your so user one, what's your position on buying this dip? I'm looking for Tesla. I'm looking for Tesla. I also have a micro cap I'm looking at, but that's more fundamental investing. It's more of a position trade for fundamentals. I think it could do a 50x in the next 12 months, especially with the Fed cutting rates. It's an energy storage play. It's a micro cap. I can go over that if you want later. I'm looking at the revenue. I'm looking at the assets under management. There's different ways to invest in trade. I like to do position trading on very, very good deals, and this is a really good deal. One of the best deals I've seen, but it could fail. The company could fail. It's a micro cap. I doubt it fails. It's being supported by government, Army, NASA, XYZ. Anyways, let's go. Yeah, let me jump to TikTok real quick. So we got Roku. I know they sold some of Coinbase. Thoughts on Moderna, Kashif. Hey, if you guys want me not to miss your comments, make sure you put them on YouTube. I'd also appreciate if you jumped on the YouTube and just leave a comment. I know it's so much work because it's annoying because we're in this digital age where we want things instantly, but it would help me out. Subscribe if you haven't already. I'd appreciate it. Let me know your name so I can see your name. I recognize a lot of you guys who are consistent. Let's see. Moderna, what is it? mRNA? mRNA. Yeah, Moderna. Ooh, Moderna's been moving up. Well, I'll say this. Moderna's part of the biotech. Ooh, that's a good trend. I like that. Moderna's part of the biotech sector. And if you want to look at it looks like it's trying to break out. It has broken out of this. What you want to do is look at IBB. Also, this is the biotech ETF, and you can see the bio ETF failed and capitulated hard, right? Capitulated hard. If you want to see it a little more zoomed out, just go to the monthly chart, and I bet you there's a huge capitulation. Oh, I guess not. I thought it would look like this. I guess it wasn't that strong, but it's consistent. It's consistent. So biotech also, this is why this is huge. I like CRISPR, CRSP. Okay. I know you're looking at mRNA, had a nice move, maybe wait for a pullback, but the FDA just approved like 2 weeks ago CRISPR gene editing. That's why I'm like, I'm waiting for this right here. CRISPR gene editing. I've been watching this since, man, I traded this back in 2018. I remember way back here when it made a big run, collapsed, made another big run. And I think it's due for another big run. It's been bottoming out for a while. These are tricky though. So you want that ETF, you want the overall market for biotech to be in your favor. You don't want to just get long. You want the actual biotech to be in your favor. So mRNA, back to it. I just wanted to point that out really quick. Strong. Ooh, a lot of momentum on the MACD. Okay, a lot of momentum building up. The RSI is moving up strongly. I still want to see a pullback though. I want to see a pullback. I want to see what moving averages. It's testing the 200. So it could pull back and consolidate a little bit. It's not going to go straight up. And you might see that 50-day start to cross and get vertical. You want to see the 50-day moving average start to get slope upwards, right? A little steeper slope. That's what you want to see. You don't want to just, oh my God, price is up. Wait for confirmation. CMCSA. How about this, Kashif? Go ahead and drop those in the YouTube, bro. That's a lot of tickers. I'm not just a ticker analyst. I do macros too. There's other people throwing stuff up. If I run out, I'll come back to you. Throw that in the YouTube. If you throw it in YouTube, I'll for sure look at it. Right? I like the YouTube. It's easier to mess with. These other ones are kind of glitchy. Of course, I'm trying to get my subscribers up. Duh. But hey, you help me out, I help you out. Tesla setting up for a nice double bottom. Yep. All right. We'll look at CMSA. CMSA. Dude, what is this? Comcast? Bro, who looks at Comcast? Oh my gosh, Comcast. Man, Comcast's chart is, I don't like Comcast, to be honest with you. Are you invested in this or are you trading it? There's no way you're trading it. Comcast looks like trash. RSI is slowing down. Momentum looks like crap. Maybe I'm just biased. I would wait though. I would wait. It looks weird. I don't like this. Could be a possible wedge pattern though, but you want everything else to confirm that. So you could be having a wedge setup here. It's not really that much of a wedge. I don't know Comcast fundamentals. I don't know what drives it. So I'm not sure. Completely streaming demand, I don't know. I would look into the fundamentals before, because this is not a good trading vehicle in my view. Could be in yours, not in my view. Disney. I know everybody's looking at Disney. Disney is finally starting to pop. It's a but now. See, this looks good because it broke the downtrend, right? Broke that downtrend. Pretty strong weekly volume. Pulled back. Perfect little pullback. At the same time, you're getting a golden cross, 50 above the 100, 50 above the 200, and it supported at that level. It supported that level also. Let's see what the RSI looks like. Momentum has been picking up for a while, and this is very bullish divergence because price has been sharply falling, and it kind of played out already, but this is good. You know, the trend is starting to change. RSI is climbing. Disney looks good. Disney looks good. Maybe stay on this 50-day moving average. Maybe just check out the 50-day moving average. You could play the break above. Let's go to the daily real quick, because this one actually looks good. Yeah, Disney looks strong. A lot of people, you know, they scaled out of Disney, so probably a lot more demand now. Go make sure they have good, solid fundamentals. I don't know what their revenue growth looks like. I don't know. And we're headed into earnings season pretty soon, so be careful. Typically, the market has been making its real move halfway through earnings. I've noticed this, right? We either move up into earnings and then sell off halfway, or we sell off into earnings, which we could be seeing here. This might be a possibility. Then halfway through earnings, the market starts to rotate back up. When I say halfway, it's typically when Apple reports. So this is a really good setup for Apple in the overall market. Right? What we could see here is AAPL. I got to say that is Apple could be selling off into earnings January 25th. Okay, so what? That's not very far away. That's 2 weeks away. Or wait, yeah, 2.5 weeks, whatever, 3 weeks. And halfway through earnings, you see Apple bounce. So I think investors, market participants, institutions, asset managers, they probably collected profits up here. They're going to be looking to buy back Apple at some point. Where's the weekly at? Any support here? There you go, 200 weekly moving average. This is also Warren Buffett's biggest stock. Also, Apple is going to be buying back stock. As usual, they have hundreds of billions of dollars in cash. Last time I checked, it was like 60 billion. Somebody told me 100 billion. Who knows? Every day they're printing more pure cash. So Apple's going to buy back stock. That their EPS goes up automatically. Their earnings per share goes up automatically. Warren Buffett, you know, biggest position is Apple. So you're not going to get a whole lot of selling pressure after this. If anything, he buys back more Apple, right? Apple probably consolidates somewhere around here, 180, probably 180. I think earnings is where we start to turn going into earnings season. Apple's a great stock, but it always depends. Are you position trading? Are you swing trading? Are you day trading? This isn't really day trading stuff unless you just want, oh, where should I enter? What's a good entry? What do I see? But what did you say here? Saint Trades. IWM has been running up since October. She's coming off the oversold daily. Yep, 100%. And gaps below. Yep. Get them gaps below. What else we got? What a strategist. Appreciate it. Is that Travis who I know? Is that my boy Travis? If not, that's fine. Appreciate it. Yeah, macro. So I tried to do macro. A lot of people don't do macro, the Fed, the macro indicators, the dollar, energy prices, financial conditions, and throw that in there with the macro data. Is the economy expanding? Is momentum picking up? Is it falling? Those are all important too. We just look at technicals a lot, and that doesn't give us the full picture. Fundamentals is like the base, right? You want to have solid fundamentals. S&P earnings, profit margins are picking up. This is supposed to be the slowest quarter. So this is why I think earnings, we turn up again. Number one, we just sold off. We got oversold. We got overbought. We're selling off. Okay, we're selling off. We're going to sell off for a while, or we'll just stay flat for a while. Going into earnings halfway through, we typically have been rotating back up. Growth is still, look at GDP just got revised up. The Fed is done hiking. Inflation is falling. I expect it to get better going into earnings. And profit, once we report profit margins for S&P, watch my Twitter. I update all the new FactSet profit margins, all the S&P fundamental stuff. I think that I don't think the expectation is that profit margins start to revamp again in Q2. So typically the market doesn't wait till Q2. It starts to bid up based off of the projection. So that's my guess. That's my guess. You can go back and watch all my content. We called this bull market rally, Santa Claus rally, for a while. And I think it's over. I think that's it. I mean, duh. I mean, we're down now, right? But we said, hey, Santa Claus rally into year end, all-time highs on the Qs. I said, maybe not S&P. I misspoke yesterday and said the S&P would hit all-time highs, or it was. No, but Dow hit all-time highs. And the Qs hit all-time highs. So we called that. Not the Dow, but we called the Qs. And now it's time for a pullback. Here's for more opportunity. The next opportunity, right? Disney, I think I did Moderna already. Do you see it breaking above 300 within the next 3 months? I don't know. What are you talking about? Yangisa breaking 300. Are you talking about the Dow? I'm a little behind here. Are you going to short Tesla on the trend break? No, I'm not going to short Tesla. I don't want that pressure right now. This is why. At any moment, you could I had a couple people, Carbides, shout out to Carbides, short Tesla today. It could get rapidly down, but it's already down multiple days in a row, and it just takes one catalyst, right? And they have a lot of catalysts coming out here to really gap up and just rip you. So I'm not going to hold anything if I'm shorting, but I'm not shorting Tesla right now. I'm not trying to short Tesla on this. I think there's more upside to it. I don't want to get caught. I definitely don't want to get caught. You just never know. Tesla, and the reason I say that, Tesla can move without the market. It can move without the market if it gets a strong enough catalyst, which they are starting to pile up. You get the 7,500 EV tax rebate. It was a tax credit that now switches into an instant rebate, right? Instant rebate. They beat production. They beat delivery numbers. Margins are pretty much bottoming. They increase prices for Model Y in China. They revamp Model Y in China, which is the new refresh. Those will probably go up. You got full self-driving. You're now getting income from the Tesla charging network, which is the NAC standard. Energy storage is going to be pretty well. So I don't want to mess with that. I don't want to short Tesla. It could just be my bias. You could make money shorting Tesla, but you want to see oversold and then short Tesla. And I just don't think we have there's any clarity yet. I don't think it's clear, or there's no clarity if you're going to swing it. If you're going to day trade it, yeah, go ahead and short it on a gap down reversal, whatever. What up, Travis? Palantir looking like a nice bounce off 15, filling that gap below. I love Palantir. I'm not in it right now. I used to be. I actually took a huge loss on Palantir. I got too excited back in the day. I'll admit that. But hey, it's looking like it's showing another opportunity. Palantir is one of those stocks I think is going to turn into like an NVIDIA. It is the #1 AI software in the world, bar none. And it's very controversial, just like Tesla. It has a what do you call it, a cult following, and it's only a matter of time. They just diluted a lot of shares in the past, and Palantir will be good. It's hard. The thing with Palantir, when it comes to their actual fundamentals, it's not that sticky. It's hard to get their services. There's a big barrier to their services. I'm sure those barriers will ease up as going forward. But I like this as a hold, not really a trade. I know people like to trade it. I'd rather hold it because it just takes one earnings report to explode, and it takes, they're going to be in the S&P next year. I guess not this year, but they can be in the S&P. So I would hold Palantir, not financial advice. That's just my opinion. I'm only bullish like long-term on a couple of things. Also, crypto, Palantir has to do with one of them. Obviously, Tesla. Bank of America. Ooh, you should sell options on that. Can you look up PayPal? Yeah. Just to let you guys know this guy was scared of stocks a long time ago. Now look at him. He's a stock giant. Didn't take him long to understand and make good money. Yeah, Travis actually introduced me to Robinhood back in the day. He used to be my roommate. Shout out to Travis. If he would have held ENPH, I'm always going to hit him with that. He used this guy. Look at this guy on Instagram. He held ENPH at it was like at $2. He was in ENPH like $2. The stock is now 122. It got up to 350. And man, he would be doing this too if he would have just held. I know it's painful, but you never want to drop that 50 cents. 50 cents. He was in it early. He was in it early. He believed in it, but uh, people get scared. But you got to be in the long run. Either way, he would have been, he would have been a millionaire. You had like what, 5 grand in there, 10, 15, something big. So man, wish you would have held that 10K, bro. You would have been a multimillionaire. It would have been hard to hold though, because it went up so much. You probably would have sold halfway through. But let's say you just turn the lights off and just let it run. You would be a big millionaire, right? I wish we could all do that. Anyways, shout out to Travis. Thanks for introducing me to Robinhood. Tell us about Palantir burn. What was your mistake? My mistake was I got in on margin. Look, I made a lot on crypto. And so I rotated into Palantir. And this is why I did the macro. The Palantir story is the reason I started to say, I'm going to master how the macro works. I just knew technicals, fundamentals to some degree. I didn't know the macro. And basically, Palantir pulled back way back here. Okay. This is before the market rolled over. And I started buying it at a little bit at 26, right? Or well, here, 23, 26, kept falling, bought more. I just kept buying the bag. I kept going down. I had a lot too. Okay. I lost 100K. And I just kept buying it, but I didn't understand that inflation and the Fed. I did not understand all that. So I didn't realize that increasing rates and inflation getting above 3% was so tremendously, negative for Palantir because they weren't profitable yet. I didn't realize how bad interest rate sensitive companies were. So I got crushed. Then I started selling options, right? I started selling options against it. That was a mistake. Never sell options in a very volatile stock. It's not worth it. You can't do it in Tesla either. I've tried it. You got to go with something slow, Apple, Microsoft. You can't sell options with it's just not ideal. You can do it, but it's not ideal. These are more momentum trades. You want to look 3 to 5, 6 months out, catch the bottom on super oversold, and then trade it back up. So I lost a lot on Palantir. I'm still bullish on it, but I'm secretly hoping it crashes. Now my biggest position is Chainlink in crypto. Anyways, imagine buying Palantir at 6. Yeah, and that's it's pretty much where I sold. I made a huge mistake, but I couldn't carry it anymore. I was like, you know what? Let me let this go. I'm hurting. So I've made some big mistakes. I've been through some pain. Do you have any thoughts on AMC? It's worth gambling on at this low price? No, I do not. I don't gamble on trash stocks. Hell no. I do not gamble on trash stocks. AMC is trash. It's always been trash. It was just a trade. It was a meme trade. It has no fundamentals, just like Shiba Coin, just like Dogecoin. There's no fundamentals behind it. They just use crypto or whatever the hot thing is to get people to buy into it. It's trash. GME is trash. They're all trash. I hope I don't get banned for saying that, but they're all trash. So no, do not get an AMC. Maybe it pops, but it's not going to last. It's dying. It doesn't really have any. These were just big gamma trades. They were short squeezes. They have no fundamentals behind them. You're better off getting into crypto, something that's pulled back in crypto, because the crypto season is just starting. We're in crypto spring. We got crypto summer, and then that's going to be a while. You got a lot of upside for crypto. It'll still move up a lot versus these companies have nothing behind it. No catalysts. Gold. We talked about gold yesterday. You must be a Forex trader. Gold is trash in my view as an investment compared to Bitcoin. But if you want to hold it and you're 70 years old and you don't want no volatility, great. But if you're trading gold, my guess is you want to see like the 30-minute chart on gold. See, gold, I'll switch to this one. GLD, where are we at? Gold 30-minute chart. All right, so gold, yeah, we talked about this yesterday. What did we say? We talked about this yesterday. We said, hey, if the Fed comes out and doesn't meet expectations with the market, which it did not, we said gold would roll over if you guys were here. Why? Because if the Fed is a little more dovish, then the market doesn't just sell off, but also they're talking about keeping rates higher. That's the opposite of stimulative. So dollar goes up, gold goes down. Gold wants to see rate cuts. If the Fed came out and talked about more rate cuts, and yeah, we're talking about this, plenty of members, multiple members are talking about rate cuts, gold could go higher because gold is a monetary inflation asset, meaning when you get monetary inflation, or in other words, central bank cutting or balance sheet money increase, right? Money flow increase, or Fed balance sheet goes up, or injection of money, then gold goes higher, because gold is protection against the debasement of currency. That's all it is. It's a store of value against the debasement of currency. Bitcoin does much better. But if you're trading it, hey, next spot is, I don't really like it. I don't think it's that great of a spot. I don't think there's nowhere to go here. Maybe way down here, because gold is also part of Forex, right? So if that's the case, wait till it comes back down to 1995, way down here at 2000. There's a big buyer down here. There's a big buyer down here at 2000, you know. So I would wait. I'd be patient. Got to stay patient. Be patient. A lot of us could do a lot better if we were just more patient, and we took the time to not FOMO in. Watch the RSI also. Oh, it's very oversold. I didn't see that, but that's 30-minute chart. Probably has some more room. Let's go to that daily. Yeah, I think gold comes down. Just be patient. Imagine buying Palantir. Oh, yeah, I already read that. Gold's a turtle. Yeah, gold's a turtle. It's for the boomers. And guess what? It's a $10 trillion asset. So it's not going to go anywhere. Nothing's going to move gold like that. They're all hoping for the collapse of the world for gold to go up. And they all say, well, what if all the internet goes out? You got bigger issues than that. Yeah, I was depressed. But you never give up. Stuff hits you in life, you got to get better. Can't complain. You got to get better. Yeah, a lot of people dove into macro, and I'll give you some of the best macro guys. Tom Lee was right the entire time. Very good macro strategist for fund strat. Tom Lee, Raoul Paul for macro. He helped me with the business cycle, understand the business cycle. Tom Lee helped me a lot with how to view positioning, sentiment, and disallocations and expectations for the market. And then I'm also coming out with a course. So if you guys are interested, I'm still working on it. It's all macro fundamentals and technicals. I'm working on the macro piece right now. And because I think that's what people are missing the most. Every macro strategist was wrong. Most of them, right? They all said, we're going to go into a deep recession. We're going to collapse. Fear, fear, fear. I heard it all day. Never happened, because this is not the past. This is not 2000. The market is, this is not the dot-com bubble. The biggest companies in AI actually are multi-trillion-dollar companies. They're not, startup companies like 2000. So they have real revenues. They can support it. Also, one of the big problems with macro, right? Everybody looks at total debt. Total debt is irrelevant. What's relevant is debt to GDP. What's irrelevant is not debt to GDP, but debt to income, right? It's debt to the income ratio. Because if you have income rising, then the amount of debt actually the cost to service debt actually goes lower. So you don't have that. People can pay their debts off, right? You need the employment, the labor market to fall apart for there to be a recession. And it's not falling apart because of massive fiscal stimulus, trillions in infrastructure, trillions in, well, not really trillions, but hundreds of billions in the infrastructure, Inflation Reduction Act, CHIPS Act. There's too much fiscal stimulus, multifamily home builds exploding, construction spending exploding, China's pumping. So jobs are going nowhere. It's just not going to happen. Yeah, Tigger Media, 100%. That's what I've learned, bro. I've made some big mistakes. Also with Tesla, I've made some big mistakes, right? I try different stuff to see, because the market's you can customize how you make money in the market. And sometimes you just pay to learn. And hopefully the education I bring, helps you to avoid the mistakes I've made. And when that course is ready, I'll be out with it. And I'm not going to try to shill anything. It's just want to teach people, whatever it is, if you're interested. SPY is looking crazy right now on the daily, coming off of oversold and nice gap at 440. Yeah. Oh shoot, what do we got here? Oh, SoFi. My bad, Carl. Probably left already. SoFi got some bad news. Look, go find, who has some real good Palantir. This guy named Amit. His name is Amit on YouTube. He does Palantir content all day. Very good speaker. one of the best. I have an interview with them on What is Palantir, and he's a really smart guy. He also does a lot of SoFi stuff if you want to keep up with what SoFi is doing. When it comes to SoFi, I don't really know what caused this. These are very sensitive to catalysts right now because they're very small, and I'm not interested in this kind of stuff. I think the market is already. I think the finance market is very congested, so I don't think a lot of these can last. Institutions are ripping them up, but some people are holding the bag on SoFi for sure. It is wait for this oversold signal. But then even then, I don't know. Go look at the fundamentals. When it's a company like this, there's always something with the fundamentals that's kind of backwards. It's very small. So where's revenue growth? Is it expanding? It could just be selling off in earnings. Where's revenue growth? Where are the margins? How much debt do they hold? You don't want more debt than you don't want more debt than assets, right? So look at the balance sheet. Again, this is going to be on the course, so you can actually read that going forward. But yeah, you want to look at the fundamentals before you invest in something, even crypto fundamentals. Me included. I actually started investing just before October low, so I bought the top pretty. Oh, before the October lows, pretty much. Okay. I'm not sure you bought the low. If you bought the October lows, you didn't buy the top. Oh, I see what you're saying versus the past. Okay, yeah, that makes sense. So SPY is looking crazy. All right. Yeah, 470. I think SPY comes down a little further. I think it's possible it just keeps coming down to this next spot here. Anyways, SoFi risky. Yeah, SoFi is pretty risky. It's not risky if you understand the business model and what could be changing. I don't. So to me, it's going to be more risky. It's going to be more risky for me. All right, I'm going to take a little bathroom break, small bladder, drink a lot of water, and we're going to come back to crypto. We're going to finish off at crypto. What are we seeing here for the technicals? I'm going to give you guys my favorite catalyst for crypto, right? I think it's the biggest opportunity I've ever seen. And I'm going to come, if you've heard, you've been here before, you probably heard it, but I'm going to tell you the biggest catalyst I've ever seen. I'll be right back. Okay, so crypto is in phase one, right? It has its seasons. The ETF is huge. Let's just keep it straight. If the ETF gets rejected, expect Bitcoin to rip back down, right? 30 RSI, probably back down to about 32K where the previous high was. The reason I have this mapped on here, so you can see the cycles. All right. These are the crypto cycles, biggest cycles in the market. Nothing moves more than crypto in general, right? You have these big outsized moves, 1 year retracements, down 80% on average, big upside move. Who knows? This was like 14,000%, comes back down, big move comes back down, big move comes back down. So you get about 18 to 24 months of upside from the lows, and you get about a year, 12 months of downside, right? If you understand that, it's a lot easier to time it. But it's not just that. You also want to know where's macro, where's the Fed's balance sheet, where are interest rates, where's the ISM, which we always talk about, forward-looking growth, where's economic momentum. So Bitcoin is just starting to rip. Once it gets above the highs, it's going to rip again. Okay, there's no supply. They cut the supply in half, which means price goes higher, because when you have less of something and more demand, price goes up. We're just now, if we do get a pullback, it'll be a good opportunity for other people. Where are we at with the RSI? It's very overbought, rate sensitive, very interest rate sensitive. Yes, Bitcoin is macro. It is macro. And when I say macro, we're talking economic cycle. We're talking Federal Reserve. We're talking the cost of money. Where's the cost of money? And where's the money supply or global liquidity headed? Right. Those are my indications for where we reach the peak in Bitcoin. Either way, here we go. There's one other asset. I think ETH outperforms Bitcoin. First off, I think ETH is still consolidating. It really hasn't broke out like Bitcoin. And if you want to see ETH versus Bitcoin, go ETH to BTC chart. If you don't have it, here it is. And it looks like a big wedge pattern. Okay. It's a big wedge. ETH will perform eventually. It's burning supply. Yes, it's expensive, but there's a lot of code that is going to be burning the supply. A lot of tokenomics. It's really nerdy. It's going to, do a lot of stuff. Either way, there's a lot of supply. This is basically Web3. This is the blockchain, right? Everything is created on the blockchain. The thing I'm most bullish on is Chainlink. You probably heard this 1,000 times. Maybe there's some new people. Why? Because Chainlink is the connector to the blockchains. All of Ethereum, Aave, right? You hear about Aave, you hear about this is lending, you hear about XRP, you hear about the graph, Solana, everybody's bullish on Solana, Binance, all these things. Well, none of them can actually connect to the real world. Blockchains do not connect to the real world. They don't have the capability of doing it without an oracle. Okay. The number one oracle by far, not even close. It's not even close. I only invest and get long in monopolies who are dominating everything, is Chainlink. Okay. This is not an advocation to buy Chainlink. It's just education. It's my opinion. Right. So Chainlink's consolidating here. It is the biggest connector. Now, if crypto died, Chainlink still goes higher. Why? Because crypto is public blockchains. Right. Now, what people don't understand or haven't seen yet is that the whole financial system, if you've heard of the Great Reset, the whole financial system is resetting onto the blockchain system, not Bitcoin, not Ethereum, right? It's private blockchains. The whole system is moving to a better ledger, and those are going to be private blockchains. The problem is they cannot connect with each other yet. They need CCIP, cross-chain interoperability, to connect to each other. Why is that important? It's like the internet. If you have a bunch of websites, but you cannot connect them, they're useless, right? Because you go from web to web. You hit links, you go from Google to blah, blah, blah. So TCP/IP connects the internet. CCIP connects the blockchain, the future of everything, which is verified web. Web3, if you ever heard of it, is the verified web. Everything is verified on the blockchain, right? And so that's what Chainlink pretty much does. Now, the actual partners is what makes me so bullish. It's partnering with Swift. If you're not familiar with Swift, okay, Swift is the international finance. Swift was set up for its users support international finance and commerce. Swift was set up in 1977. 518 institutions, 22 countries were connected, through the Swift network. What is this? The messaging system for the entire financial system, right? At least the first world financial system, JP Morgan, central banks, they use the Swift network to message stuff. And basically Swift transacts, about $2 to $4 quadrillion of transaction each year. All right. That's a lot. CCIP collects a revenue or a fee for every transaction. So if you look out 10 years, you're looking at 5 to 10 years, whatever, you're looking at CCIP collecting a revenue off of tens of quadrillions of dollars. Nothing else has that reach, right? That's a lot of revenue for Chainlink. You can stake your Chainlink also, and that's just one piece of it. DTCC is the depository settlement layer for the Federal Reserve for all equities, for all transactions. You've heard BlackRock say tokenization of all assets, all real world assets. They're going to be tokenized, meaning they are transferring from the old way of counting stuff and keeping track of it to the new way, which is on a blockchain. And it's not going to be on Bitcoin. Bitcoin's just a store of value. It's not a system for the financial system. Bitcoin maxis will be pissed and say, no, it's coming, but that's just not the case, right? That's just not the case. So Chainlink actually connects those systems together, and that makes it a huge market cap. Chainlink's about 9 billion in size. Bitcoin's about 900 billion. Ethereum's about 300 billion. So it's much smaller, and the use case is really big. I'm very bullish on it. Right. Again, this is not financial advice, but I think it does. I think it's one of those safe bets. I know Solana's up a lot, but Solana doesn't really have a good use case. This is a lot of and even the dudes I follow love Solana. I'm not bullish on it. So I don't just follow anybody else. I know software engineers who actually look into this and can tell you, okay, well, that doesn't make sense, or this isn't as big as we thought it was, right? Solana is just a big bet. So Chainlink is connecting all blockchains, all real world assets, art, real estate. It's all going to be tokenized on chain. Doesn't mean your blockchain, but on chain. Okay. A new system, sort of like everybody transacts, not with cash now, but on some type of credit system, right? KYC, whatever it is. Now we're moving to the blockchain. That's the future. That is the financial reset, is onto blockchains. But these blockchains don't communicate with each other without Chainlink. Okay. So I think it's a very big use case. It also does proof of reserves. It does a bunch of other nerdy stuff. We'll do another video on it eventually at some point. And I just want to share that because it's a big opportunity and maybe it helps some people out. Anyways, Onyx can't communicate with Swift. Would you say that's the, oh, there we go. Tigger Media. If BTC goes to 32K, where do you think Link goes? I think Link goes to about 12 or maybe back to 10. It got crushed. It got crushed recently. Pretty low. So we'll see. I think at the lowest, it can come back to 11, right? Maybe it comes all the way back here. I don't want to see that because, I'm levered in. I'm in there, but it could come back down, right? Could come back to 12. That'd be a good opportunity for others, where one person's pain is another person's opportunity. That's the current problem with railed payments. Yeah, and they're slow too. A lot of railed payments are slow. There's a lot of money in other countries who can't access. They have to wait 2 days for settlement. Chainlink, or on the blockchain, what happens if they move, when the financial system moves to the blockchain, you eliminate a lot of the middlemen. Also, transactions settle instantly. They settle instantly. There's no wait for settlement, and it takes away a lot of security risks. What do you say? Solana has an oracle called Pyth, much smaller than Link. Yeah, they have their little oracle, but it's just not competitive with Chainlink at all. They say Swift is an archaic model, though. It is. It is an archaic model, which is why it's adopting distributed ledger technologies, the way they say it, the right way to say it, which is blockchain, distributed ledger technology, because these are old archaic models. They lose. I think Swift got hit with false transactions, not false, but with a lot of fraud, up to like $10 trillion or $2 trillion in like 20 for like over like 3-year period. So they need better security, and that's what blockchain does, and that's underlined by CCIP's leading that, which is Chainlink's technology. What's your favorite forward-looking growth slowdown macro indicator? My favorite, I think, is actually, I'm writing about this right now. There's 3 of them. There's the Chinese credit impulse, or credit impulse in general. You could look at the US credit impulse, and that's basically, you take GDP and you divide it by, you take the new loans, or credit, right, coming into the system, divided by GDP. Credit leads GDP. So that's one. That's not my favorite one, but that's one. You want to look at the Chinese cycle. They typically lead the cycle. That could be changed over the next 10 years. Old lagging indicators, a problem with a lot of investors or macros, they look at old stuff and they don't adjust to the new information. They don't adjust to how things have changed, right? So you can look at the Chinese credit impulse. That's one. Another one, ISM, as you know. But if I had to look at one, it would be ISM new orders. You can look at durable good orders, but ISM new orders, that is pure growth, which is forward. Those are supply chain managers. They're not going to lie because they have to write this down. They're not going to lie about it. It makes no sense. Their businesses would fail. They wouldn't make any sense. They wouldn't be efficient. So ISM new orders is probably my favorite indicator to look at. I just say ISM has different pieces, but ISM new orders is the most forward looking for growth. They are climbing right now. But they're still in contraction territory. Once we cross above 50 or we get near 50, we'll see if it can cross. And I think that's going to happen in May or April. So yeah, ISM new orders would be my favorite. Would you say, do you have one for China Credit Impulse on TradingView? I don't know if I have China Credit Impulse on TradingView, but guess I'll show you. I was actually looking at this today. I was going to post it on Twitter. Here's the US. Hey, can I show this? Here, let me see if I can show this. This is the US and China Credit Impulse. This will be on economic activity. Yeah, right here. Okay, I'm going to bring this up so you can see what we're looking at. They're starting to turn up. Right? So there it is. So basically, you're taking new loans or whatever that country or nation's form of credit is, divided by GDP. If it goes up, it means that credit is leading GDP, right? Credit is very quick. GDP takes a while. Credit is forward looking. GDP is backwards looking. So when you put those two together, you get a lead. So China's starting to pick up, even though the economy is still sluggish. It's rate of change. It's all about rate of change. And their new loans are going up. They just printed the most yuan in history, like a trillion, 1 point something trillion yuan. So China's credit impulse is leading economic indicator. The US is starting to pick up. The question is, does it just continue higher? Well, I think so. Where did I find that chart? This is on, you can see right here, it says macro, micro, me. I have a subscription. I pay like $29 a month to get all the data. This is typically where I create the charts. Has a lot of good data. You can also get positioning data, Bukowski. This is where I got all the sentiment positioning. You can see asset manager positioning. You can see active fund manager positioning. You can see sentiment. I'm putting all these into the business cycle stuff so I can present it. Because the one thing I never had was positioning. I had to look at everybody else's charts on Twitter. So now I have access to them. So yeah, go to macro, and just type in credit impulse, and it'll pull up a bunch of different credit impulses. You can even read how they're made. Hold on. The indices I bought was not US, so it's not a signal. Hold on. It's not as gradual explosive. Okay. Oh, I see. Okay. You're probably out of a different country, huh? You're probably somewhere else. Okay, well, I think that's it. If there's no other questions, I'm just gonna wrap it up because there are some people that might be joining, or just stick it in your head. Here's what we got. This is which is most important. GDP just got revised up from 2% to 2.5. That can change, but for now, growth is gonna look better than expected. Expect rates to go up a little bit. Right, they're already down a lot. ISM, the business cycle for the US is bottoming out. It's turning up. That tells me in the next 3 months, we should be in expansion territory from fiscal policy. Productivity is picking up. A lot of immigration is showing a lot of growth, and the Fed is done. So if they do cut, boom, that goes higher, right? It's going to continue to expand as they cut rates. And then when you look deeper, this is more nerdy. Deflation is taking place on prices for manufacturing. Employment is picking up. That's positive. Increased production is picking up while demand is sort of slow. So demand is down. That's okay. Inflation comes down further while productivity picks up, employment picks up, and there's no inflation. So we're looking good. I think we bounce in the stock market over the next couple of weeks, maybe midway through earnings season. Earnings are set to expand. I think we do pick up. And then I think it's going to be a good opportunity over the next month. And then crypto's a little wild. I'm not sure what crypto's going to do. I just hang on. And the third indicator. Oh, the third indicator is just money supply. Year-on-year money supply, Bukowski. I've been showing this like the whole time in the newsletter. If you guys look at it, newsletter, go subscribe to the newsletter. I'm doing it once a month for now instead of every week, to give me more time to make other stuff. But money supply year on year is the other one, and it's global money supply. So it's the Chinese central bank, it's a PBOC, it's the U.S. Fed, it's the Bank of Japan, it's the Bank of England, and the European Central Bank. All of them, all their money printing together year over year. When that picks up, the economic cycle is going to start picking up, and it has been picking up for 5 or 6 months. It bottomed in October when the stock market bottomed. Economic activity, ISM new orders also bottomed around there. and the credit impulse somewhat bottomed around there, even though that's been a little different. So you put all this together, you can look forward. What's it called on TradingView? M2 money supply. It is, but I don't know where the year on year is. I don't know where you can look at money supply. Like this is the money supply right here. Oh, I'm not showing it. This is the money supply right here in blue. So you can look it up. I have not seen the indicator that shows year on year. I can find it. I can try to find it. The year over year. I don't know if they have it on TradingView. But it's the year over year one, because we're looking at not just the absolute level of money supply. That's irrelevant. What's more relevant to economies is the rate of change of money supply. So is it accelerating or is it decelerating? It could be still moving up, and that's decelerating because it's not going up at the same pace. So year over year is going to give you the pace and the pace of money supply. And those are the three: ISM new orders, Chinese credit impulse or credit impulse in general from the biggest economies, and money supply year over year from the biggest central banks. You might be able to find it on YouTube. And I wish I could give more. I just don't want to take a bunch of time to look for stuff. I'll try to get it on TradingView if you remind me. There's a lot of stuff going on. Either way, I'll have the charts available as we get through this business cycle. ISM services or ISM manufacturing. ISM manufacturing is more significant to the business cycle, to the economic cycle, because goods lead the economy. Services are a bigger piece, and this always confused me. Services are the bigger piece of the economy for sure. But services can change really quickly. Manufacturing is slower. So because it's slower, it's a big, like if you input a factory if you put, let's say you build a couple services inside of a new country, it's not going to really bring GDP up that much. But if you insert a big industrial plant manufacturing, that's going to boost the economy a lot more. Because that's how you build economies, is infrastructure, hard goods. So the manufacturing, and this is just my theory, there's probably a bunch of reasons why, but the ISM manufacturing is more significant. Other reason I know, services never went negative, guys. Services never went negative, but the stock market got crushed, right? The economy went negative. So services didn't really help. All services told you was there's still strength in the economy. So employment never rolled over. But the underlying growth, the business cycle, the biggest part of growth is manufacturing. And so I go with the ISM manufacturing. That's a question I ask myself. That's a really good question there. Good show, man. Yeah, glad you, hopefully you guys brought you some value. Don't forget, lift weights, build muscle, eat protein, learn something new, right? Teach somebody something you learned recently. And most of all, stay blessed. Stay blessed out there. We're blessed to even be able to have this information and learn something new. A lot of people don't have that privilege to learn and to take advantage of the market. So stay blessed out there. Appreciate you guys as always. And I'll catch you next time, Bukowski. Central bank liquidity year over year. That Johnny guy, central bank liquidity year over year. Oh, he made that? It's probably the same as global liquidity year over year. It depends what central bank you're looking at. It's the same thing. Central bank liquidity, money supply, it's kind of all the same thing. It's going to move all in the same direction. It might be one of them might lead a little more or the other, but right now Japan's printing, China's printing, Brazil's printing, and the US is set to start printing, and that thing's going to blow up. Anyways, guys, stay blessed. Thank you. We'll be back tomorrow to see what the markets bring. Maybe we'll see what happens, but Friday is a big day. Catch you guys next time. Watch the dollar. Stay blessed.